it's absolutely imperative that now is the time for the private sector to go and take all risks. We've been saying that we've been at the cusp of this big private sector Capex boom for the last 2.5 years. It's time we actually did it.
I don't know from where this trigger has come about. Some data is also flowing saying Indian private sector is not yet ready. I'm sure they're ready. Aren't you?
That was Finance Minister Nirmala Sitharaman and G20 Sherpa Amitav Kant speaking at the ET Awards, delivering a clear note from the political capital to the financial capital. It's time to put your money to work and get skin in the game, as growth will not be served on a silver platter. But is India Inc. once bitten, twice shy? Or is the rapidly changing tech and geopolitical landscape making it harder for corporates to commit to Capex? As economics takes center stage ahead of an election year, I sat down with Amitav Kant, Uday Kotak, Sajjan Jindal, Preetha Reddy, and Sanjeev Mehta, the heavyweight captains of India Inc., to get a ground reality at the recent ET Awards. Also in this episode, a candid chat with the boss lady of North Block, Finance Minister Nirmala Sitharaman. It's Tuesday, 2nd of May. I'm your host, Arijit Burman from the Economic Times, and you're listening to Picking Up the Pace of Capex for an 8% growth. Will India Inc. deliver? On this ET Awards special on the Morning Brief.
I want to start with an interesting factoid that we stumbled upon the other day. Between the quintet of India Inc.'s heavy hitters, and many of them are in this room, that's Mr. Mukesh Ambani, Mr. Chandrasekaran, Mr. Kumar Mangalam Birla, Mr. Mittal, who's here, Mr. Sarjindal, a little over $172 billion of capital expenditure has been lined up over the next 12 to 60 months. That's 5% of our nominal GDP for fiscal 23. From cement to steel, green energy to EVs, 5G, home is clearly where their heart is. But is that enough? Prime Minister Mr. Modi urged Indian industry to unleash their animal spirits right after budget, nudging all of you to step up, losing your purse strings, and capitalize on the new global supply chain opportunities to boost output. So let the entrepreneurial instincts flourish. Mr. Kant, I want to start by asking you with a counterintuitive question, which is, when global trade is slowing down, is 8% really a realistic target? Nobody is convinced that any economy, including China, will continue to grow at 8 to 10% over the next 5 to 10 years. So do we need to recalibrate the number itself?
So over the next 5 fiscals, it's largely projected that India will grow at about 6.8%. My personal view is that it's not adequate. India needs to grow at minimum 8% per annum over a long period of time. If you have to become a 5 trillion and then subsequently a $10 trillion economy and raise the per capita income of Indians, even during periods when the global growth was slowing down, and India itself has grown earlier at high rates of 8 to 9%, but it's grown for relatively short periods of 4 to 5 years. But we need to sustain this over a 3-decade period, and I've been a long-term believer that this can't be done without the private sector actually accelerating the pace of investments. I think the gross fixed capital formation in India has to rise. It's increased to about 29%, but at its peak, it's been at 35-36% in 2004. And that needs to be accelerated. I think the real point is that right now, the corporate balance sheets are really good. The bank balance sheets are really good. The NPAs are at an all-time low. The government gave out a bonanza of 1.45 lakh crores to bring our corporate tax to international levels. And I think it's really time to ponder over whether the country would have been better served if that resources would have been put into infrastructure or would have been used to push a consumer demand if the private sector is not investing adequately. I think the animal spirit of the private sector must rise up to the occasion now. To my mind, it's imperative, it's absolutely imperative that now is the time for the private sector to go and take all risks. If you look back in the last 3 to 4 years, actually, other than 3-4 large private sector groups who've taken the risk to invest, there are very few private sectors the balance sheets are really good now. Now is the time. So there is consumer demand is rising, capacity utilization has taken place. The country has to grow. So it's the time now for the private sector.
This is the time. But Mr. Kotak, I'll come to the private sector part, but a large part of our investment story is also predicated upon FDI. Since FY21, FDI figures are coming down. With this narrative around nearshoring, reshoring, do you worry FDI inflows into countries like India will further go down? So is there a problem area?
I think divided into two parts, the strategic part and the tactical part. You've seen a significant slowdown in the rest of the world, valuations correct, particularly in some of the startup and the tech areas. Therefore, the slowdown in FDI is much more linked to those events around which a lot of investment came, probably at very high valuations. But if you look at India's position today on the global stage, India has managed its geopolitics for its economics brilliantly. I can't think about any country which has positioned itself the way India has in this round of geopolitics. 1 year ago, when we had this big Russia invasion of Ukraine, I was very worried. Oil was going up. What's going to happen to India? We've got to take sides between Russia and the West. But India navigated that position and is today on the global stakes table of geopolitics. With that, smart economics, low oil, and keeping the flow open is another big plus. Therefore, talk to most investors in the world. There are not too many places on planet Earth which give the kind of stability which India has today. And the nature of investments is moving more, not necessarily in startups at very high valuations, to more real economy areas. And from all that we are talking to some of the largest sovereigns and pension funds around the world, they're wanting to come in scale and size and are actually looking at a lot more flowers bloom. One of the things which has happened is you talked about 5-6 groups. We need many flowers.
Yeah.
And what we need to see, in addition to larger investments by these 4 or 5 groups, why can't we see the animal spirit come into broader corporate India? And that is our challenge. Let's move beyond that. And Mr. Kant, rest assured, private sector will rise to the occasion, give them time, and do not suggest increase of taxation, please. Thank you.
I'm saying this simply because, we've been saying that we've been at the cusp of this big private sector Capex boom for the last 2.5 years. It's time we actually did it.
Mr. Mehta, our strength has always been services. Come what may, they have actually cushioned our stock markets. Is the manufacturing narrative overwhelming the services story, which has been robust so far in India and has worked?
First, I think the important bit is it's not an either-or story. For us in India, it has to be an and story.
Yeah.
Yeah, services is a very strong bedrock. It has to grow. And we have seen the export of services. They've done extremely well. Manufacturing, which is today less than 20%, has to move up to somewhere in the vicinity of 24-25%. We are talking about creating massive amount of jobs, and very clearly, the collateral impact which manufacturing will bring in is immense. So we do need manufacturing. It's not just that we can grow only with services. But I'll just give you, talking about private sector investment and all, 2 data points, which gives us confidence that the private sector investments should come back. First is the capacity utilization for the same quarter this year. March quarter versus the same quarter last year, it's gone up by 200 pips. The other is, if you look at new proposals which CMI tracks, in the last quarter, it has been 12 trillion rupees, out of which 92% is private sector And this is 2.7x more than the average of the previous 11 quarters. These are good signs. I don't think the risk appetite of any manufacturer in the country has gone down. And at the end of the day, we must also remember we should not get again back into the era of reckless investment and reckless lending. If it is driven by demand, I see no reason why manufacturing investment or capacity investment won't go up.
Mr. Jindal, you have operations around the world, including US. Now, with the CHIPS Act, the Inflation Reduction Act, won't industries also move to US? I mean, companies have committed over $200 billion for US manufacturing alone. Other countries in Asia, in ASEAN, are also rolling out the red carpet for this whole China plus one strategy. Aren't you facing a problem of plenty?
No, I think the US, the industry in the US, they wanted to cut their costs and they outsourced all their manufacturing things to China and similar countries globally. And today the globalization is become like back to the old ways of doing business, back into their own economies. And that's why US is really supporting the industry within the US. And every country globally is doing that. They are all trying to promote industries, manufacturing, components within their own countries. And that's what...
Even our ASEAN countries.
Even ASEAN countries.
Yeah.
Similarly, India is doing the same way. The PLI scheme is a very supportive scheme, which is supporting the manufacturing within India. And I think the benefits of this will show up in the coming years very clearly.
Mr. Reddy, I wanted to ask you that other than investing poorly in mass education, would you agree that we have not done enough to bring women into the workforce, which is a crucial initiative that several East Asian nations actually did to expand domestic export of labor-intensive sectors?
In a lot of industries, it is the women who are the back end of the workforce now, whether it's healthcare or services, IT services and banking. There are a lot of women out here. So I think they're capable, can be done. And for an economy which has to grow, women have to be brought into the workforce. And we have to acknowledge that.
Are we doing enough, or what more needs to be done?
I think there's more which needs to be done. In terms of equal opportunities, women can do so much more. Even choices for education, I think they have to be incentivized to really take up higher education. And I think that some incentive for women to take that up is extremely important. For them to be able to work in a surrounding, in a situation which is maybe very male-centric, I think some amount of support and acknowledgement would be good. We need to do a lot to bring women into workforce. But I come from a business where it's largely by women, and now because there's 4 of us, all women, we run it. But I can see that, women coming into the workforce would be good, important, and would definitely take the economy further.
Mr. Mehta, with, from an MNC point of view, hasn't the overall hurdle rates gone up, vis-a-vis, ease of doing business to currency depreciation in India? Is it that much difficult for CEOs to convince their boards? I'm talking about MNCs, vis-a-vis investing in India.
Let me give you an example coming from the company I lead, HUL. India today is the largest Unilever business in volume terms. And in another few years, it would become the largest Unilever business in value terms. So from a Unilever perspective, the top priority
is India.
Yeah. Now, Unilever is not an exception. In the last few weeks, there have been several global corporations who have invited me to speak to their boards on the India story and how HUL as a multinational subsidiary has succeeded in India. I don't think the interest in India that we see today was as high today as it was ever before. There's huge amount of enthusiasm towards India.
Mr. Kotak, if I look at the RBI data, it shows large Capex projects, which are over 5,000 crore investments, has seen a significant drop in the last decade. Should we therefore infer that small is beautiful and that should be our new Capex strategy? In Germany, the focus clearly is on MSMEs. In China, in US, they go in for national champions. What should we do?
I don't think it is either or.
Okay.
I think we really need to grow our MSMEs. We need to really build the middle India, and we cannot get away from that. So getting the point which I made, development of India across sectors requires deepening of entrepreneurship, of really making it easy on the principles of ease of doing business even further. We've made progress on this, but there's a long way we can go. We are also seeing a significant consolidation in many sectors. And I have players from the telecom sector. Look at the level of consolidation which has happened. We are from 13 to 3 players, which is inevitable part of evolution. You're seeing that in the airline sector. You're seeing it
Steel, cement.
So I think consolidation is good, but it should not be at the cost of net increase in capacity and growth. I genuinely believe entrepreneurship really needs to fire, and I share with Mr. Kant his desire for much higher growth. But we must put in place the enablers for that. It's big business, it is MSME sector, and I think it's the banking and the financial sector. What is the capacity of the banking and financial sector if India wants to grow to a 10, 15, 20 trillion economy? Are we having the capacity for that? What is the ability of capital? What's the ability of underwriting skills? What is the ability to take scale? Sajjan Jindal is here, and I'm saying this. If Mr. Jindal wants to acquire a 50,000 crore asset in India, he should be able to get funding for that acquisition finance in India. He should not be going overseas for getting that funding. Why can't we have those skills and underwriting ability within India rather than saying, oh, this is too risky for our banking sector, and therefore we keep banks away? We have to be very careful. We can avoid accidents on the road, but we must let cars drive much more on the road than they may be.
But you said that industrial investments do reflect a picture of concentration. How do we break that?
I'm quite comfortable with reasonable consolidation as long as it does not lead to monopolies. So if we avoid monopolies, but have some consolidation, that's good for economic outcomes over a period of time. It's a right balance we need to get.
Mr. Jindal, everybody talks about environment and sustainability. How is environment and Capex interlinked to the sectors you operate in, which is steel, cement, power, and more importantly, who pays for it?
So I think the global warming or the change in environment is a real thing. And so therefore, the energy has to become sustainable, and we cannot afford to continue to burn the fossil fuel and keep polluting the environment and creating more and more CO2 into the atmosphere. So all our businesses, unfortunately, are very CO2 emitting businesses, whether it is steel, power, or cement. And these are difficult businesses, and therefore there's a huge amount of concentration in how to optimize, how to improve, while continue to grow, how to improve and reduce the risk of generating more and more environmental damaging gases. But my basic theme or thought process is that ultimately it's the economics which drives everything. But I think India still, these are early days because we are a developing country. We have to build, but Europe is taking the lead. One thing is very clear, the customer is not going to pay for all these extra costs.
Yeah.
If you want to make green steel, then obviously it will be much more expensive than what is the way it is being produced today. But customer is not going to pay for that. So whether the government will pay, I don't think in India the government is going to pay. In Europe, governments are paying, they are providing a lot of subsidies to the steel industry or to the other industries. And that is also becoming a sort of restrictive practices so that imports of steel into Europe won't happen. So that's how the European countries are doing this whole strategy. But in India, we as industry, we don't believe that though Mr. Kant is sitting here, that the government will be able to pay for these kind of thing. There could be some sort of cross subsidy, could probably happen that they will put more tax on coal and then subsidize some industries. But I'm not a great believer of government supporting or subsidizing, and I don't even want that. That should not happen. We have to sustain ourselves. We have to create our own ways to do. I think COP26, the Western countries had promised $100 billion for the emerging markets or for the new countries, but not a single dollar has come into any country. So therefore, I don't expect even that money coming in.
Mrs. Reddy, the other Capex, we keep talking about, human capital. I wanted to ask you about R&D Capex in pharma. Why are we nowhere close to even some of the emerging markets when it comes to R&D Capex?
I think over the past years, what has happened is, in a way, it's the survival. So all the capital was going into starting a business, running a business, and making it successful. But now we're at a time when, research and development has become so important, and there is capital available now to put into it. And it's like investing for the future, is that if we start investing into R&D now, we know that few years down the road that, we will be able to capitalize on what work we've done over the past 5 years. And I'll give you a small example. Even in the pharma sector, a lot of R&D did happen in the West, but we know that it's come into our country. We also now are the largest population, 1.4 billion, and we have the largest gene pool in the world. So if we can really work on this, we would come up with solutions which would be far better than what exists now. And this is a simple example. So I think everyone is waking up and realizing that investment into R&D actually pays like great returns in the future. So if it didn't happen in the past, I'm very confident that it's going to happen in the future. In every sector which we see, even if it's green energy, I think a lot of R&D has gone into it that we're even able to talk about, responsible or renewable energy. It happens in healthcare, it's happening in pharma, it's happening in construction, for example. So I think it didn't happen earlier because we needed to exist, but we're at a cusp and we will be seeing more in the future.
Mr. Mehta, everyone talks about this demographic dividend, billion plus population, but market sizing should be ideally linked to consuming class and not the full population. Do we get it wrong?
Look at it from this lens. Often what happens is when we look at India, we do percentages.
Yeah.
And when you look at that part of the population which has much more disposable income, and we say that the percentages are very small. We do a proprietary research. And if you look at people with more income and also based on behavior and lifestyle, that comes to about 14% of the households in the country. 14% of the households out of about 300 million households. You're talking about even this class being in size bigger than most European nations.
Yeah.
So this is substantive. But then we have to understand that in India, the issue is also when you de-average, it's not about a $2,000 per capita or 1.6 lakhs per annum rupees, is you have to look at it from a perspective that there is still a large population which is at the bottom of pyramid. And that is where what we need is inclusive growth. Not just a GDP growth of 7-8%, but if we can spread it across, and these are the people whose consumption of even FMCG products is just about $20 per capita. So just look at the runway to grow. So demographic dividend is a reality, but it has to be intertwined with inclusive growth to make it come alive.
Mr. Kotak, this whole debate about the supremacy of the dollar, do you think it's, the days of the dollar hegemony is over?
I genuinely feel the biggest financial terrorist in the world is the US dollar. All our monies are in nostro accounts, and somebody in the US can say, you cannot withdraw it from tomorrow morning, and you're stuck.
Yeah.
That is the power of the reserve currency. And I think we are at a very crucial time in the world history where the world is desperately looking for an alternative reserve currency. These changes happen once in hundreds of years. The last time it happened was when it moved from the British pound at a time when people used to say the sun never sets on the British Empire, to the movement to the US dollar. The question is, which country in the world can take that position? And I'm just giving a few examples. I don't think Europe can, because it is disunited states of Europe. I don't think UK or Japan have the heft to be taking those positions, though the currency, both the British pound and the yen, are free currency. China, I think, has a major issue of trust with many, many countries around the world. Can India do it? And for building ourselves to a reserve currency is a long, sustained walk and run India has to do. It has to build strong institutions. It has to build a framework which is not dependent on the whim and fancy of A or B or C. The mechanisms have to be strong. India has to be trusted. The US dollar, every dollar bill has a line. In God we trust. We have to get a line to say that in India we trust for the rest of the world to put their money into an alternative currency to the US dollar. But it is our time for making a shot at it, which will take us probably 10 years. But I don't think China can make it. I don't think Europe can make it. Otherwise, the US has an unbelievable, uncomparable privilege of being able to print money and get away with it as it has for the last 100 years.
That's the ultimate unleashing of the animal spirit.
I thought Uday had a point, because if you look at the post-COVID era, it has had a devastating impact. 200 million people have gone below the poverty line, 100 million people have lost the job. And the financial policies pursued in terms of loose packages, high inflation, tightening of interest rates is actually leading to a scenario where resources are flowing from emerging markets to the developed part, whereas future growth is all going to come from emerging markets. And therefore, there is a need to look at international financial architecture in a very big way.
But is redesigning and re-imaging a brave new world be a tough task as global shocks continue, with small to big banks still failing? Bodhisattva Ganguly, ET's editor and editorial director, sits down with the finance minister to evaluate the risk and realities to the India story.
So, Finance Minister, you've just returned from a trip to the US. What is your sense generally of the financial sector there, and do you see a contagion risk from the financial sector in that country and in the Western world in general?
Contagion risk, if you go by the rule book, if all central banks are responding to the Fed's action almost sequentially, yes, and as a result you find Europe being more exposed to the chance of coming under recession. But I think since the last 1.5 years, gradually our central bank is also decoupling itself. So for India, I would think the contagion risk is not really a problem, but the risk is there in the sense when markets to which you largely exported are coming under recession, then the demand is going to fall, your exports are going to suffer. So that risk is definitely there. I'm not eliminating that. But the contagion risk, usually linked to the conduct of the central banks, I would think is not there for us to face.
As you came in, I think you caught the last part of the discussion, which was on private sector Capex, and that's been one of the issues which one has been grappling with. It is not picking up to the desired extent. I think the private sector is richly represented here in this room. Is there something that you would like to tell them or make a pitch for?
Well, for once, I'm going to talk completely in favor of the private sector from their side. If after 2019, bringing down the corporate tax and giving a time till March 2023 to expand businesses or set up new businesses and everything else, if the world had been normal, I think to be a bit tough and expect saying you have not really come out in flying colors would have been a reasonable argument. But if immediately after 2019 October when this was announced, September end. You had the pandemic and how? And after that, you also have the uncertainties of the war. But despite all this, I still can see many expansions happening, new investments happening. Otherwise, why will there be such a impactful impression about India and its attempts to bring in renewable energy? Look at the keenness with which people are coming to India to set up in many fields, whether it is your semiconductors or looking at renewable energy or looking at rare earths. And also because the policy per se has now opened up even space sector. I was there in a different context releasing a book. I did speak about India's public sector enterprises policy, which actually has opened up so many areas in which private sectors can come and invest. In fact, there's no area left without the private sector coming into it. But I don't know from where this trigger has come about. Some data is also flowing saying Indian private sector is not yet ready. I'm sure they're ready. Aren't you? Why? I'm supporting you. Why? See, that's the problem with Indian industry, private sector. They don't, yes, we are there. They don't say that. They gently, on being asked, would clap and...
But there is perhaps anecdotally, there seems to be a sort of a rise in the number of income tax notices, GST tax evasion. While no one is supporting tax evasion, obviously one needs to crack down on it. But there, impressionistically, there seems to be, a large volume of notices going out, various sectors being investigated, being probed. Earlier, it was there was a question about the ED, but it's not just, it's also IT, GST, etc., raids and searches. Could that be a deterrent?
I think the industry knows where the raids are going. Let me be very clear. I'm not justifying it. I remember in 2019, I was pilloried saying, oh, tax terrorism. You questioned me several times on it.
Yeah.
I'm not suggesting that that word is not being used, that expression is not coming about now, and therefore there's no terrorism. I'm not saying that. There can be some harassment here, harassment there, harassment some places. But today, when you're looking at deep data and AI-driven, faceless-driven systems, the fact that trails are coming out, obviously, and the trails going to shell companies are there in your face, I can't see how the CBDT or CBIC can remain mute spectator, how the boards can remain a mute spectator when data is active, it is showing. And if brazen misuse is happening in some sections, it's only natural that you should go. And I'm glad, and efficiently if they're going, I'm glad. Because that has to be plugged. So those who are genuinely and rightly paying taxes will lose faith. There are pictures put out. Shell companies, about 300 of them, operating in about a 50 square meter area with just one table and chair and getting refunds to the extent of about 400 crores. Would you expect the department to sit quiet and watch? Obviously, they'll go. So I don't want this to be a conversation eternally about India's and tax authority. Tax authorities are now sitting up and being ready to answer as well. But if you're going to be quiet for fear that you'll be accused of unleashing a certain kind of terrorism, the inefficiencies will only perpetrate. We don't want that. We need to appreciate people who are paying genuinely the tax, and those who are misusing it will have to be called out.
My take. To quote Mr. Amitav Kant, we have been saying that we are on the cusp of this big private sector Capex boom for the last 2.5 years. Now it's time for action. It indeed is. But the global headwinds will not make it that simple. As I started the show by quoting a factoid, private sector Capex is indeed happening, but it's concentrated among the big boys. Unless it's widespread, the target of a 5 trillion economy will remain just that, a target. Sluggish exports when deglobalization is the buzzword will add to slower growth. That will also get hemmed in by the lagged impact of rate hikes. Domestic demand for now, at least, in the top end of the pyramid will help several from corporate India grow in double digits. Margins will recover from decadal low too. But market sizing, as many economists rightly say, should only be linked to the consuming class and not the full population. A billion-plus population doesn't have the consuming power, and they indeed need to kickstart demand. You have been listening to Picking Up the Pace of Capex for 8% growth. Will India Inc. deliver with me, Arijit Burman? Big shout out to Rajesh Nayak, our sound engineer, and show producer Sumit Pandey. Executive producer Anupriya Nair. We hope you like listening to this episode. Please do share and follow us on social media handles. TMB drops every Tuesdays, Thursdays, and Friday, and is now streaming on Apple Podcast, Amazon Music, Google Podcast, Spotify, JioSaavn, apart from the Economic Times website, and of course, Economic Times' very own audio platform, ET Play. Thanks for listening. Goodbye and good luck.